Hey everybody, today I'm going to be going over this new article from Business Wire titled Volta Realigns Organization to Reduce Costs and Drive Strategic Priorities. So there hasn't been a lot of news on Volta lately, so this has got a lot of new information coming out, especially pertaining to Volta's quarter 3 earning numbers that are going to be coming out in the future here. Lots of very important news further down in this article. So Volta today announced an organizational realignment to reduce costs and drive strategic priorities. This refocuses resources on accelerating the company's successful digital advertising business. Okay, they've got these 3 bullet points here. Okay, today's announcement represents a 10% reduction in current full-time employees. As of today, Volta has reduced approximately 18% of its full-time employees through other workforce reductions and organic attrition since June 1st, 2022. So this actually spills over a bit into the previous second quarter that we had this year. So quarter 3 this year is actually only a portion of that 18% number because 1 month of that is in quarter 2. So it'll be very interesting to see what kind of expenses we're going to be seeing in the quarter 3 report. And this continues down here. Volta is implementing additional cost-saving initiatives through tightening business processes, limiting the use of outside consultants, consolidating teams in its 3 San Francisco offices into 1, and managing marketing and administrative costs. So basically these 2 paragraphs right here, they all basically tie into Volta's selling general and administrative line. And this is a very interesting number because a lot of people have recognized that this number is very high for where Volta is at in terms of the revenue. And their chief accounting officer actually commented on this in the quarter 2 earnings call, and he basically admitted that it's very high for where it should be and that they needed to work on reducing it. So we did see that here in the second quarter. Actually, it looks very high, but it actually has been cut down since the first quarter. If we go back to their first quarter income statement, we see this at $56 million rather than quarter 2's $44 million. So they did work on reducing it, and they were successful at getting it down. But there's a lot of other things in this article that are pretty concerning for Volta's future. I'll just say that. If we keep going on here, the Volta's board of directors and senior executives are taking difficult but important steps to align the business with current market dynamics and position the company for long-term success. Here, Volta outlines some of the risk factors that they have identified with their business, which includes the advertising environment, particularly as automotive brands delay advertising spend due to inventory shortages, limited electrical transformer availability affecting DC fast charger installations, which previously that was supposed to be a fairly significant part of Volta's growth, was the DC fast charging, and the impact of the quarter 4 shopping season on construction availability at commercial properties. Now this part right here is nothing really particularly new. I mean, that's just kind of how construction has always gone. There's more setbacks and delays, and just less work is able to get done during the holiday season and in the winter. So nothing too surprising there. But this second paragraph here has a ton of really important information, especially as we go into the quarter 3 earnings. Okay, given the ongoing execution of Volta's strategic reprioritization combined with these market conditions, Volta is revising its quarter 3 revenue guidance to between $13.5 and $14.5 million. Okay, if we go back to Volta's quarter 2 earnings, we can see their revenue here was at $15.3 million. So what they're now guiding for quarter 3 is lower than what it was in quarter 2. So Volta's revenue is declining now quarter over quarter. That was not at all part of the plan to begin with. Originally, Volta was guiding for between $17 and $18 million. That's what their guidance was at the time of their quarter 2 earnings call. So Volta's revenues now are declining. They've got negative revenue growth. So obviously, right off the bat, that's not good news for the business. If we move on further here, we see the company is withdrawing its full year 2022 revenue and installation guidance until further notice. So They previously gave guidance of between 70 and 80 million dollars for the full year of revenue, and now that's completely out the window. They're giving no guidance anymore. So who knows what quarter 4 is going to look like. I will note that for the quarter 3 guidance right here, this is probably going to be very accurate because we're already right at the end of quarter 3. So, and this article was just published yesterday, so chances are Volta's got a pretty good idea of what their quarter 3 revenue is. So I would be surprised if it was outside of that range, if they somehow missed that range, because they pretty much already know what their revenue number is. But yeah, their installation guidance, though, this is another very interesting one. They had previously guided for between 1,700 and 2,000 new installations this year, but they are not going to come anywhere close to that. If we pull up this screenshot that I took in July, late July this year, Volta listed currently 2,844 stations on their network at that time. And, you know, as they need to grow their network really fast, if to get to that 1,700 to 2,000 station installation target, they need to grow really fast, but that's not at all what we've seen. We've seen that Volta actually has dropped that number. They don't include that number anymore that they used to. So maybe kind of concerning there. They're kind of hiding their number maybe, but they still do post all of these charging locations. So if you add those up, if you add all of those up, you do get this number right here, 2,971. Which is less than 150 more stations since July. So, you know, they've barely added many stations here over the past number of months. Barely expanded their network at all. So what's going on here? Ultimately, what it comes down to for Volta is the amount of current assets they have, particularly cash. If you go back to quarter 4 last year, almost $300 million of current assets. Quarter 1, $234 million of current assets, and in quarter 2, $148 million of current assets. So these current assets, and if you take a look at cash as well, 262, 205, 105, the cash keeps dwindling down, current assets keep dwindling down. Volta just doesn't have a lot of funding to be able to grow their network anymore. They're at a point basically where they have to choose if they want to cut their growth of their network, or if they want to cut their basically the employees that they have. And basically what we're seeing in this article is kind of a mixture of both, right? Well, mostly what we're seeing is these operating expenses being cut down. And cutting down on those operating expenses can make Volta operate more efficiently. Obviously that number is really high, the SG&A number. So it would be great if they can get that down, but I'm not completely sure if these cutbacks that we're seeing are necessarily out of trying to make their business more efficient, or if these are things that they're doing out of necessity because they're just completely running out of the funds to keep their business afloat. So it'll be very, very interesting to see what Volta's third quarter, fourth quarter, what these are going to look like for them, because Volta's business is not looking very good right now. Personally, I think this is kind of the beginning of the end for Volta. You know, the stock is as low as it's ever been, but the bad news is also really as bad as it's ever been. And one more thing I didn't point out yet is that Volta's stock keeps getting closer and closer down towards $1 per share. I've got a whole video about all of the major risks associated with Volta, including what could happen if Volta dips below $1 per share. So be sure to check out that video, and I'll see you in the next one.